I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the January 2026 meeting. At its latest meeting, the FOMC chose to maintain the target Fed funds range at a level of 3.5 to 3.75%. And they also maintained the rate and reserve balances at a level of 3.65%. The decision was widely expected by the markets, though there were two dissents on the committee. One from Fed Governor Stephen Byron and another from Fed Governor Christopher Waller, both who favored a 25 basis point reduction at this meeting. The post-meeting statement changed somewhat in favor of a stable economy with solid growth, and one that the committee sees as a bit uncertain, but with fairly balanced risks. We'll see what additional information Chair Powell gave us at his press conference after the break. Welcome back. Chair Powell gave his prepared remarks to start the press conference. He said that the committee believes the current stance of monetary policy is appropriate to promote progress towards the committee's dual mandate. He indicated economic activity has been expanding at a solid pace, that the labor market appeared to be stabilizing after a period of gradual softening, and inflation remains somewhat elevated in relation to the committee's 2% goal. He said the 75 basis points of rate cuts delivered by the committee since last September should help stabilize the labor market while allowing inflation to trend towards 2% after tariffs have passed through. In the question and answer session, Chair Powell had no comment on a number of questions about his future at the Fed and recent politics surrounding the Fed. He did have a few comments on the economy and rates, though. He said there was broad support in the committee for holding rates steady at the January meeting, and that the funds rate is currently at the higher end of the plausible estimates of neutral. He indicated this leaves the committee well positioned to watch the economy and let the data speak. And what the data says meeting by meeting will determine the future of rates. Chair Powell said the outlook for growth has definitely improved since last meeting and that there have been some signs of labor market stabilization. The outlook for economic activity should help employment over time, and the effects of tariffs are expected to peak in the middle 2 quarters of the year and then move through. The risks to the outlook have become more in balance, though there's still a bit of tension remaining between the inflation mandate and the employment mandate. Well, pretty much as we expected. The Fed is on hold and will wait to see more data before making any further rate moves. Normally, you'd say things should be pretty quiet for a while. But with President Trump set to announce his pick for the new Fed chair any time now, it's likely we're in a calm before the storm. That's the FOMC update for January. Thanks for watching, and be well.